Hello, welcome back to part 2 of the financial crisis and inside job. So we saw the 1980s, 90s, 2000, how the whole financial system was deregulated and that led to this bubble, and now we have the crisis. So how did it happen? Well, if you think about the real estate market, prices had kept on accelerating. So to prevent that crazy inflation, the Federal Reserve started raising interest rates. They had reached a bottom in 2002 after the internet crisis. The bubble burst in 2001. And so the Fed started raising them slowly but surely. And in 2005, those interest rates were 5%. So what happened? What was the impact on the real economy of these interest rates going up and up? Well, people who had bought houses with subprime loans, which were all on variable interest rates, they could not repay their mortgages. No surprise. So the retail banks could not sell anymore their loans to investment banks, and all the investment banks who had already all these hundreds of billions of CDOs, mortgage-backed securities, on their balance sheet could not resell them to any investor, asset managers anymore. So what happens is that little by little, all the dominoes started falling. Homeowners, retail banks, investment banks, and insurers. And among them was Lehman Brothers. So on the 15th of September 2008, Lehman Brothers filed for bankruptcy. 30,000 people lose their jobs. 100 offices in the world close, and that sent the entire world in turmoil, dumbfounded. And I remember that time on that night and day very well because I used to work for Lehman Brothers and I worked in finance. And my husband back then had a financial company and a fund, and his prime broker was Lehman Brothers. He had all his funds deposited and held by Lehman Brothers, so he lost everything at that time. So it was quite an awakening. And so to me, the world of finance, I realized how rotten it was overnight. To go back to Lehman Brothers, the size of the balance sheet when they filed for bankruptcy, i.e. the level of debt they had, was $600 billion. And the size of their equity, i.e. their capital, was only $1 billion. So what's the ratio? 600 to 1. Remember how before it was allowed ratio was 15 to 1, which is pretty high already. And they managed to increase it to 33 to 1. But at the time, in 2008, when it failed, it was 600 to 1. It was crazy. Lehman really, for 5 years, kept on growing and growing and growing on the back of the mortgage market, mortgage-backed securities market. In 2007, they had record profits of over $4 billion. And just a couple of years before, they had bought five mortgage institutions, and among them, 2 subprime. And at that time, it looked like a very smart move, but that was what caused their big free fall. Too much greed, not good. So, of course, Lehman was not the only financial institution to be in difficulty. They all were. AIG, Merrill Lynch, all of them. Bear Stearns had gone bankrupt also a few months before Lehman. But the government decided to bail out AIG, the insurer. Merrill Lynch got bought by Bank of America, and nobody wanted to buy Lehman. They were too happy to see Lehman die. Lehman had lots of enemies on Wall Street because they were perceived as being too arrogant. Plus, Goldman Sachs was the arch rival and enemy of Lehman, and the ex-chairman of Goldman Sachs, Hank Paulson, was in 2008 the head of Treasury. So the government bails out AIG. It cost taxpayers $150 billion, and a third of that money, $50 billion, goes to Goldman Sachs to compensate them for their losses. Really not really good. So Lehman dies alone, violently, that day, and that sends the world in shock. the US administration did not do any warning. So they didn't consult the other countries. So the whole world woke up like, what the hell, what happened? Maybe the other countries would have helped. I mean, I don't know, concerted action, that's what we're talking about today. Nope, the government decided all by themselves. So I like that sentence from the film. It says, it was like a cardiac arrest of the global financial system. Cardiac arrest. So what happened? George W. Bush, president at that time, injects $700 billion emergency to boost the economy. But that was not enough. That was enough to save the banks. Not all of them, but it saved the financial system. But the economy went into in recession. So you see how the financial crisis or finance spreads to the economy. The banks were saved, but the economy went recession. If you remember, General Motors and Chrysler filed for bankruptcy, Chapter 11 at that time. And that's, I think at that time also that Chrysler got bought by Fiat. US consumers stopped consuming. So what were the repercussions on the rest of the world is that they were not buying goods made by Chinese factories. So tons of Chinese factories had to close, and over 10 million of workers, migrant workers in China, were left out of jobs. And back to the US market, in terms of house foreclosures, there were over 6 million house foreclosures a year later. So what we see from this crisis is that the banks were bailed out by the government, but the rest of the economy and society suffered. And it's always, and I'm quoting again the film, and I think it was Strauss-Kahn who said that at the end of the day, the poorest, as always, pay the most. I mean, he didn't need Strauss-Kahn to say that, but he was the one interviewed in the film at that time because he was at the IMF. I think he was head of the IMF. He was at the IMF then. And thinking about the poor, if you remember Greece went bankrupt as well, which Greece was the poorest country in Europe. And what happened to them? Why did they suffer so much? Is that their central bank had loads, billions of dollars and euros of mortgage-backed securities, CDOs. And who sold them those rotten loans? Pick a name, Goldman Sachs. So the crisis takes place, and after that, the question is, who is responsible? The accountability question. So, of course, the Congress and the court, they all interrogate the bankers, one after the other, to try to understand the story. And none of the bankers showed any regrets. All of them said that they were acting in the best interest of their banks and also for the clients. So they didn't see the problem. It wasn't their fault. Nobody was responsible. And in a way, they had no worries because they had earned so much money before that they didn't really care. They didn't go to prison. They were not fined. And even worse than that, some were even paid more for just resigning. I'll give you an example. Merrill Lynch, CEO, in 2007, he was paid $90 million bonus. In 2008, he had to resign after Merrill Lynch was bought by Bank of America. And then as a compensation for him resigning, he was paid the modest sum of $160 million. So that was really not great. And a lot of the other CEOs, what did they do? They joined advisory boards at financial institutions or at big companies. And I would like to look also at education at that time because you had a lot of professors at Harvard, Columbia, professors of economics, of business, that were also acting as advisors to the financial institutions, and they were also paid hundreds of thousands of dollars just to sit on boards, i.e. doing nothing, just advising. And if you think about, were there not conflict of interest, academic conflicts of interest? Those guys are professors, and yet they were advising private corporations and financial institutions on their regulation. And when they were interrogated, they said, no conflict of interest, no problem. So nobody felt responsible for it. Nobody changed their ways. Nobody paid anything. Nothing changed after that crisis. And by the way, in 2010, so 2 years after the crisis, the bonuses on Wall Street were higher than in 2000 than they had been 2 years before. That's crazy. So everything started as before. The banks became bigger, more concentrated, more powerful. And this is an interesting number. The banks on Wall Street employed 3,000 lobbyists to go speak to the congressmen. 3,000 lobbyists. That's one lobbyist for 5 congressmen. No, the other way around. It's 5 lobbyists per congressman. So each congressman there, they have 5 people going and trying to make them pass laws or vote things in favor of the financial institution. 3,000. That's 5 per congressman. It's crazy. So what about now? Or what about what happened those past 8 years since the film, 2011? Well, anyway, past 10 years. Well, factories have moved abroad where labor is cheaper. American universities are so expensive that most young Americans cannot afford them. Income inequality has kept on growing, is the highest in America of all the OECD countries. It's unprecedented, that big jump. And and tax cuts, all the tax cuts that were passed during deregulation, they didn't benefit the poor, they benefited the highest income. So I like that quote, is that for the first time in history, the average American have less education and are less prosperous than their parents. It's the first time ever that such a situation happened. So in 2008, Obama campaign was to reform Wall Street culture. That's what he got elected on, or one of the reasons he got elected. But once he came to power, nothing changed. He could not reform Wall Street. But that's fine. Maybe he tried and he didn't manage. But it's even worse than that. Is that he appointed, again, as US Treasury, he appointed the same guy again, Larry Summers, the guy who ran the deregulation under Clinton, the Harvard professor. To all the people in the administration, so he hired Larry Summers as his head of economics council or something like that in the government. But all the people in the high seats driving the economy and finance were all from the financial sector. And that's why it was nicknamed Wall Street government. It didn't start with Obama, but it certainly did not stop with Obama as he said it would. And don't take me wrong, it's not that I don't like Obama. I mean, he has a very smart wife, but he didn't change the system. He didn't want to, he didn't manage. Maybe a bit of both, I have no idea. But that was the whole campaign of Bernie Sanders in 2016, was really to reform that system. And he managed to get a lot of followers, especially among the young population. And you had this whole grassroots movement which emerged of people really believing. I mean, the guy was awakened. He's the only politician. It's the first time I was interested in politics. It was when he was campaigning in 2016. I thought like, oh wow, here's someone who speaks clearly. It sounds like it's the truth. It makes sense. For the first time in my life, I thought there was a politician who made sense. I had never had that impression before. So it was the first time I got interested in politics. But for a lot of people, he was perceived as a utopist, like me, and a socialist. So socialist is a really bad word in America. You know, it's like it's a sin. And the Democrat Party got rid of him. And what was the result? Well, the result was that Donald Trump was elected, and nothing changed. So now that the U.S. election is soon, what's going to happen? Don't know. But that's another history. Oh, I would like to make a parenthesis to go back to Lehman. You know, Lehman's close to my heart because I used to work there. 2000 to 2006 was really a booming time. Lehman was making tons of money. Did you think I benefited from this? Nope. I never got paid. I was paid less than 60% below, my male colleagues doing the same job. I'm just talking about salaries. I didn't have bonuses, they had huge bonuses. It was complete injustice. And by the way, I was also the only woman on the trading floor in equity sales at that time. But again, that's another story. Gender inequality, politics, that's another story. So to come back to here, the system is still really rotten. That was my deep realization in 2008 because I worked for Lehman. My then husband had his fun. Anyway, it was a big wake-up call. The system was and is still pretty deregulated, that banks can do pretty much anything they want. And they play with fire. Banks became casinos. Traders become super excited at making easy money. And you're paid on short-term profit. I mean, it's really not a sustainable system, and it certainly does not benefit the economy, nor society, nor the planet. Greed was really, really good, and is still good in this big, giant smoke screen. And income inequality has never been higher. So, sorry, I have to look at this. Yeah, I was thinking about inequality. Let's put numbers on inequality. There was a question that was asked by, I think, one of the central banker or someone in Asia in the film. He says, why should a financial engineer be paid 4 times to 100, 40 times to 100 times, anyway, 4 times to 100 times more than a real engineer? Real engineers, build bridges, real things. And financial engineers, they build dreams. So that's the quote from the film. And I would like to add to that quote, yeah, they build dreams that become total nightmares, especially for the taxpayers, i.e. for us. So the system is really rotten. Nobody has an interest to change it. They all know each other. They all breed with each other. They're all in bed with each other, basically. And it's really incestuous. And to make matters worse, the corrupted system goes back all the way to education. Remember those professors at Harvard and Columbia? That's what I was talking about. They are highly paid. They are not paid teachers' salaries. They are paid more like big corporate salaries or even banker salaries. They are paid to preach liberal views, to preach deregulations. So we get into this pretty unhealthy system, and I like that quote from the film. The financial industry also exerts its influence in a more subtle way, one that most Americans don't know about. It has corrupted the study of economics itself. So yeah, it is based on flawed economic theories. That's probably why I never understood anything in economics when I was taking those classes at Harvard. And it's based on flawed theories. It's a subject that we will cover in that part of the course. So Inside Job is a brilliant account of that crisis and of the system's dysfunction. It really illustrates how our governments are still in the hand of a very few people who are not looking at driving the economy, people, society, driving. They're not looking at the road. All they're looking at is their pockets. When you had the financial crisis, nobody got persecuted. Bonuses were higher than 2010 and 2008. Nobody was fired. They still have their jobs, or if they lost their jobs at Merrill Lynch, they get hired by another bank or another financial institution as advisors for another fund. Anyway, they didn't lose their jobs or money, those big bankers. Whereas the world went into recession and tens of millions of people lost their jobs at that time with that crisis. It's completely unfair. So a system like that is not sustainable. So nothing changed. So with the 2008 financial crisis, to go back to what we said, or I said at the beginning, it was not an accident. Whether it was in 2008 or the ones in 2001 or the 1987 financial crisis, none of them was an accident. So that brings us to here, now, in the present. Now, this current COVID crisis, even though it's not a financial crisis, do you think it's an accident? don't we have our part of responsibility? Because we are all part of that system. And that's what I really think, that now, with this crisis that really touched us to the core, that there'll be more people who will be willing to change their behaviors, the way they consume, the way they do business. Because we need that change, and it's quite urgent. And even though the situation looks quite desperate, because nothing changed before, so why would it change now? Good question. So it does look desperate, but after a while, I think maybe we're going to wake up. Even if it looks desperate, some things are worth fighting for. Thank you very much.